Well, pressure on corporations to go green is coming from institutions that hold the purse strings. Our next panel is investing in net zero. The moderator is Nathaniel Bullard, Chief Content Officer of Bloomberg New Energy Finance. And the speakers are Leila Fourie, Group CEO, Johannesburg Stock Exchange; Majun, Founding Director of the Institute of Public and Environmental Affairs; Scott Minerd, Co-founder and Global Chief Investment Officer of Guggenheim Partners; and Noel Quinn, Group Chief Executive, HSBC. Nathaniel, all yours.
Carol, thank you very much. Good afternoon, good evening, and good morning to those of you around the world joining us here. And we have a very, very important topic to begin discussing. So this concept of net zero is something that honestly wouldn't even have come to the table 3 years ago or 5 years ago. But right now it's actually front of mind for how we think about investors allocating money on a pathway to get us to a point where there are no net greenhouse gas emissions across the entire economy. These are targets that people set into the future around the world. But here we've got a group of investors and policymakers to think about that a little more tightly. Now, for those of you watching, I do have a poll question that I put up, and it's around when we think this concept of investing in net zero will take hold. I've made it a bit provocative on purpose. We're going to give you some time to answer the questions, and then we'll review them later. But in the meantime, I want to start with our panel. And Noel Quinn from HSBC, I'm going to go directly to you. Tell me a bit about how you see this concept of investing in net zero, what it means to you, and how you as an organization think about it.
Yeah, we announced our commitment to net zero, and we announced two commitments. Firstly, we as an organization in our own operations, our ambition is to be net zero by 2030. And then secondly, as a financial institution, through the activities of our customers, we wanted to announce a commitment where we'd go net zero for the totality of our financing operations by 2050. We made that announcement just a few weeks ago. We think that's an important thing to do. What we also said is it's important that we also help finance the transition that our clients are going to have to go through over the next few years. And in that regard, over the next 10 years, we expect to finance around about 750 billion to $1 trillion of additional activity over the next 10 years. So I think the pressure is on for us all to make tangible commitments in that regard.
It's a very nice start, and I think it's really important to highlight what you within the organization can do, right? That's a relatively contained target. And then what you as financier can do to the tune, as you said, of 750 billion to an additional $1 trillion. I'd like to hear from you, Scott, as to how you approach this in your investing capacity. What does this mean to you? How do you think about it across the portfolio?
Sure, Nat. One of the things that at this stage I find interesting is there's no uniform definition of what net zero is. I mean, are we really committed to net zero emissions overall, or are we looking for every industry to get to zero? Because I think the technology probably is going to take a while to catch up. But the number one concern I have is that very little time is being spent on trying to set economic incentives. Until the private sector has economic incentives to get there, the reality is that everybody will continue to act in what they think is their best interest. And right now, a great organization like HSBC, who's made a huge commitment and is way ahead of the curve, can be negatively impacted if they move too aggressively when other people decide they're going to take advantage of the fact that HSBC has changed their policies.
So do you think that this is something that needs harmonization, like in a way that we bring more groups together to sort of set targets? Is this a policymaker's question? Like, who's going to be the prime mover on making this come together in a way that's beneficial for everyone?
Well, I think it's all of the above. I think the policymakers need to look at this and understand that there are incentives that can be put in place which basically don't cost anything for the governments. But two, I think the investment community in the broad sense should be getting together and discussing this issue to try to be develop a uniform standard about a baseline for what the objectives are, what the definitions are, and what the rules of the road are.
Indeed. Leila, I'd like to ask you then, that notion of objectives and rules of the road, in your role, you certainly could play quite a part in setting that. Tell me a bit about how this strikes you.
Yeah, absolutely. And I think this whole concept of net zero is very subjective and dependent on the basis on which you define your emissions. 8 out of the top 10 ESG funds in the US still invest in oil, gas, and other carbon emission type industries. And so I see my role as an exchange, or our role as an exchange, is leveraging our convening power and engaging across the ecosystem of the financial services markets and on a global basis, harmonize and to standardize measurement techniques and quantification of carbon emissions and all sustainability measures for that matter. There is a lot of work to be done, and it takes a long time. If we look at what happened out of the Great Depression and in fact, even after World War I, it took approximately 10 years for the US to put in place their financial accounting standards. And so I think if we fast forward to this pandemic and this crisis, it's highly likely that out of this crisis will come a coherent and innovative new way of measuring the most important thing that currently, ironically, is very unequally measured.
So I'm very curious about that. It's interesting that time frame you gave, because I think about vaccines in that same timeline, that at the same time that it took about a decade to get accounting standards nearly a century ago, it also took about a decade to get a vaccine in place for influenza. We're likely to now have a vaccine that went through a process about an order of magnitude quicker than that. Now, I don't think we can get there quite on a regulatory framework, but how long are we talking? Are we talking 10 years to get some sort of harmonization, or are we talking less? Noel, I see you shaking your head there.
I think it's going to move much faster, and I think there is a coalition of the willing at the moment building within the financial services sector. There are a number of task force and working parties looking at this. I think our investors are calling for this. Our own people are calling for it. And many of our clients are very committed to making substantial progress on this. So I think we can get a valid set of standards into place for the industries to start measuring. And we need to get that in place soon. And I think there's a willingness to do so. I myself, I'm chairing a task force that's looking at exactly this issue. How do we as a set of financial institutions put objective information into the public domain about our financing activities against those commitments to net zero, and how we make sure those standards are applied consistently, and there's a verification methodology. So I think, but I know there are other working groups looking at this as well. So I absolutely agree with the need for standards and verification and reporting. And I do think there's a commitment to making urgent progress on this.
Good. I want to return to that a bit, but I'd also like to hear from Majun first, if we could. So China's made a rather robust commitment around net zero. And I'm wondering if you could tell us a bit about this and a bit about how you see that playing as an investment thesis for investors inside China and for those looking to invest in China.
Thank you, Nat. Yeah, I do think this is very, very important for China to make this commitment because, this is the first time for China to make a long-term commitment on climate. And it occurred at a critical moment. Not just, China's kind of first recovered from this, trying to recover from the pandemic. So the economy is growing, and unfortunately, carbon emission is going up. But also, it is the moment for China to make the planning for the next 5 years. And that was quite critical to integrate some of the ambitious target into that. Before this pledge, it was very depressing a lot of frustration as the U.S. pulled out of the Paris Agreement. But now, all of a sudden, with the EU making enhanced commitment and China's making this ambitious planning, and then the new administration in America. So it looks more promising. Having said that, 2060 is still far, far away. So how to distribute all this, divided that into near-term and mid-term target, and then distribute that to the regions and to the target, to the industries. We are working on that as a group, working on data. We're creating new mapping and database to make that happen.
Thank you for that. And I think it's very important to note that 2060 is both an incredibly ambitious and very important timeline, but it's also quite far away. I mean, that's multiple business cycles away. So how, and I'll ask you first and then others, how do you split that up into something that people are investing in meaningfully right now? So how is China making the approach to say, well, there's 2060 and then there's 2025? Like, how do you think about that?
Yeah, that's correct. I mean, first, the first major milestone will be the peaking of our carbon emission, because at this moment, our carbon emission has already been over 10 billion tons last year, and it's still growing. It's picked up again, and so how could China need to pick and pick first? So the commitment now is to pick before, by 2030. So if we can pick earlier, the earlier the better. Bend the curve sooner, the better. So 2025, it's quite crucial. The next 5 years is quite crucial. So we have just developed a carbon map, including a carbon peak mapping that showcase, which provinces and cities have already made commitment. It's going to be very challenging, and then try to also, figure out the major emitters, the coal power, iron, steel, cement, and all these major ones. How much they measure and disclose their reporting their data. So try to put all this on the digital map for the investors to use. So far, we're tracking more than 8 million companies in China. We managed to get a lot more data, but on the carbon side, it's still limited. So this is the crucial first step.
You're just tracking 8 million companies, you say. That's really quite extraordinary. But I think this is important now to kick back to our investors here. I mean, Scott, 2060 is really, that's multiple business cycles out. But surely you see some signals now that give you an indication of how to allocate assets. Something that makes you say, we're going to pursue this, we're going to perhaps pull a bit back from that.
Sure, yeah. Well, by 2060, I'll be thinking about retirement. But, in terms of, how we're looking at this, the approach I think we are trying to take is one that focuses on, I'll call it the substance of the matter, rather than the individual acts of companies or corporations. And, let me give you an example. Data centers right now absorb approximately 20% of all the electricity being generated in the world. The people who are providing it, utilities which are using oil-fired plants, petroleum companies that are generating and creating the oil, those are often characterized as the villains. The reality is, who is the villain in this story? Are we supposed to punish those people by blacklining industries and blacklining companies as investors? Or, should we be blacklining the people who are just indiscriminately increasing the demand for carbon production? And so, there are a lot of thoughtful questions to be asked around investing. And I think heretofore, most investors have just tried to come up with simplistic answers.
So is it helpful to keep them simple or to make them more complicated, I guess? Like what's gonna benefit us here?
Well, it's interesting, we work with an organization called Goal 17, and it's a forum where companies can come and essentially it's sort of like the Truth and Reconciliation Commission in South Africa, which is to say, I know that I've got a problem. I know I'm doing something wrong, and I'm committed to a pathway to going to zero emissions. But at the same time, I have investors around the world that are applying ESG standards that are cutting me off from capital and making the capital more expensive for me to actually implement the change. And so, we're trying to figure out, how do you come up with a rational approach that says, all right, you're committed to making this transition. We're going to help you raise the capital to get there, and then we're going to hold you accountable. And so it's if we really want to make this happen, I think we have to use both the carrot and the stick.
I'd like to explore that a bit. This concept of ESG, like whether or not it's sort of broadening the brush or closing it up in terms of where capital gets applied. And then, what do you see? Like, is an ESG screening in the service of, getting us on a trajectory to lower emissions? Is this actually cutting off capital for those who might need it for this transition?
I think it depends on the context. Divestment or cutting off capital, particularly in those fuel-related stocks and bonds, can have a dislocating effect and cause a shock to the system. The key sort of industries that are affected in this type of environment are energy, transportation, agriculture, waste. And I think the most important cross-cutting industry is energy. And the unfortunate reality with that is that in many, especially emerging markets, energy is an enormous employer of staff. And so by resolving a climate crisis, you're creating potentially a social crisis. So these sorts of activities need to take a systematic approach and a planned approach. There are two sort of approaches that tend to shift companies' speed at which they adopt cleaner and more appropriate sustainable practices. The first is a shareholder advocacy type approach, and the second is where are the funds funneled? And I think that in most countries, both of those actions are at play. In developing countries, particularly in a country like South Africa, where we have been facing into an energy crisis, which has a compounding effect on the rest of the economy, one has to be thoughtful and quite careful in have a long line of vision in planning that transition away from coal-based electricity. In South Africa, for example, 90% of our energy is derived from coal. And so while there are plans in place, they need to move faster. There needs to be a systematic plan that brings everybody along. And of course, those plans can't necessarily foresee technology changes, which have a pretty fundamental impact on both the utility of the electricity and potentially on the generation, for example, of electricity.
Thank you. And you nicely set up something that I want us to get into, which is this notion of technology and technology change. So, Noel, I'd like to ask you, as an investor in funding a lot of actual physical assets, like, what's the state of technology right now? Like, where along a net zero path does investment look most promising, and what are the things that are looking less so?
Investment in new technology, investment in new business models, investment in new industries that are going to emerge in order to solve the decarbonisation challenge we all have is essential. And that's why we've quantified it, that we would expect our investment in new technologies, new businesses, new business models for our clients will consume circa 750 billion to $1 trillion over the next 10 years of incremental investment. I agree wholeheartedly with what Scott said earlier. It's about facilitating companies transitioning off of old technology, old sources of energy, onto new technologies and onto new solutions. And that's what we have to do. Now, the whole financial system needs to play its part in that. Equity, bank debt, the capital markets, governments. And I think it will require all of the participants in the financial services sector to be proactively supporting the core industries and the core companies on the transition journey that they're going to have to go on. Otherwise, we collectively cannot achieve net zero. We can't.
Do you think that there's any misalignment or lack of alignment between those different asset classes, between equity, bank debt, for instance? Like, do you see a difference as you look across your portfolio between positions or attitudes in either one of those classes?
I think there are some inconsistencies and conflicts. If you look at it from a regulator's point of view, as a bank regulator, some of those exist in old carbon-heavy industries, have an environmental risk attached to them. They could become stranded assets at some stage. And therefore, there is the temptation to penalise the banking sector for carrying on lending to those old industries, because there's an environmental risk there, and one day they could become stranded businesses, stranded assets. On the other hand, if you invest in new technologies and new businesses that are innovative, there's a higher credit risk, because some of those businesses will fail, some of those technologies won't work, and some of those business cases will fail. So good environmental solution, possibly, but a poor business model, because the government support schemes aren't there for them to be successful. So there are those conflicts, but that's for us to work out solutions to those challenges. And that's what we've got to commit to doing, finding solutions to some of the challenges that are on the horizon. We've got to finance this transition. If we, the banking sector, don't play our part, it all falls to governments or multinational development banks to find the solution, or equity. And there won't be enough of any of that to finance all of the work that has to be done over the next couple of decades. I want to go back to China as well. I have no doubt, by the way, China are committed to that goal, and they will put in place 5-year blocks of incremental progress towards that goal. I have no doubt whatsoever that action plans will now follow to achieve that goal.
And Majun, I'm curious, because Noel just smartly mentioned this concept of stranded assets, things that have been built really not long ago in many cases within China that will have to be moved out of economic activity in not too much time. In the United States, we think about this in terms of like an asset that's 40 or 50 years old, but in China, that's a much more accelerated timeline. So tell us a little bit about how that looks to you.
Yeah, as said, it is quite concerning that new coal power plants and other energy and carbon-intensive industries still being planned, and some of them are still under construction. So with this new commitment, I think that the banks, financial institutions in China also started paying closer attention to that. So I think that is very helpful. The past weekend, I've been invited into two forums. One on climate-friendly banking, and the other one on the ESG of ESG standards of the listed companies. So you can see that it has created a new dynamic. We have been helping, as I said, tracking millions of factories, and based on the big data, every day 3 million pieces of emission data into our system. Based on this data, we developed a dynamic environmental credit assessment tool, and this has been widely used by some of the largest brands in tracking their supply chain in China. Started with local emission, but now extended to the scope 3 or supply chain carbon footprint. which usually account for sometimes 60 or 70% of their total carbon footprint. And now some of the leadership, some of the pioneering brands have already set their, drive their suppliers in China, major suppliers, not just to measure and report, but also set long-term emission reduction targets. Chinese companies are significantly, backward, on that. So among the top 50 brands of our supply chain climate index assessment, only 2 Chinese brands are on the top 50, Huawei and Lenovo. The others are all not on the list. And also, but promisingly, very positively, during the pandemic, we've been helped with one of the largest banks in China to run through 70,000 of companies who want to borrow money from it, based on the big data. And so they drive them not just to resolve those violation records of local emission problem, but also drive some of them to use our carbon calculator we developed and to report, measure and report their carbon footprint. I hope that will be, that's also a very good step forward.
Certainly so. So I believe that we've got poll question responses ready to go, and we'll pull those up in a moment here. But you highlighted something that I think is important to work across the panel here, which is what the role of civil society is here. And I'm very curious, and Leila, I'd like to start with you. How much you see sort of civil society play a weight here? Like, how much do you have pressure on you to act, not just coming from investors, but coming from everybody else that can be considered a stakeholder?
Yeah, I think the stakeholders, the civil society need to play its role. If we want to have a more sort of balanced, society with the government, the corporations, and the public, civil society can play a pivotal role in that. And we started from, our group was set up in 2006, by compiling all this data and drive change. At the beginning, not much data, very difficult to, a lot of pressure coming. But China, changed course, changed its policy, and now, now we have a lot bigger space. Environment is the single area with the largest, widest social consensus in China. So in some way, we're quite lucky. And so far, more than 16,000 factories, companies have engaged with us. At the beginning, some of them were not very happy, but now, our data has been increasingly taken as some sort of a service to them, because it's helped them to identify the problems and become equal partners with this equal access to data. So I think this is, in China, the civil society now can play a bigger role, especially on the environmental side, climate side.
Thank you. And Leila, I'd be interested to get your perspective on the same.
Yeah, I do think a very important factor to consider is the green consumer. And the green consumer will influence both the actions of shareholder activists and of divestment advocates. And there was a study done by MSCI, and they argue that 87% of millennials who are aged between 24 and 39 and are high net worth make their ESG, their investment decisions based on ESG track records. And it's important to recognize that this demographic is now an active investor. And 73%, according to the same study, of millennials believe that climate change is personally very important to them. So this comes through in not only the consumer investor, but also in the staff that green companies are able to attract, and particularly millennials, who are now constituting a very large component of the resource pool, choose to work for companies with whom their value system resonates. And green companies and sustainable companies are a vital part of that value system. So corporates are not only going to be able to attract better and higher qualified and more qualified staff, but their consumers are also going to support them by voting with their feet.
Certainly. Scott, I'm curious to see what you think about that. The sort of millennial impact and people and staff and potentially investors as well voting with their feet.
Sure. Well, I think it's interesting, all the people who are here today, we may have some overlap, but we have divergent stakeholders in this game. And, as a fiduciary in the asset management business who represents other fiduciaries, there is no direct mandate by most holders of capital to adjust their investment portfolios based on an ESG standard. Part of the reason for this is that when you look at pension funds around the world, you look at insurance companies around the world, they're being faced with a crisis of inadequate returns to fulfill the commitments that they have made to their stakeholders. That is, a pension fund assumption and return maybe at 6 or 7% a year. And so the idea that I'm going to give up some economic return to step up and fulfill what may be a noble objective is not in my mandate. So, I understand what Leila's saying, and that is that there will eventually be, I think, a popular pressure to try to change this behavior. But the reality is that in a free market society, we are driven by everybody's own self-interest. And it's not in the self-interest of a lot of people to change these standards right now economically. And that's why, I think the whole question here hinges upon economic incentives to make us change our behavior.
I mean, I can't argue with that whatsoever about economic incentives. I've got some poll results that have come through. So here we are. They're not terribly uneven, let's put it that way. So I said, when will the majority of global businesses have a public net zero emissions target? So we actually have a surprising number to my mind that have said in the next 5 years. We've got another 40% that say by 2030. And then the remainder there saying never. And I'd be curious to get reactions from the field here. Noel, what do you think about that?
Yeah, I'm more positive than that poll, and I am for a couple of reasons, and I'll share some of my own reasons for making this commitment. I think there are two ways to look at this and motivations for change. One, it's doing the right thing, and there are many stakeholders that are putting forward that argument. For society, for the environment, investors, our own colleagues, our customers. But there's also, for me, a commercial imperative. I see this as a significant commercial opportunity. As an organization, we've been here for 155 years. HSBC has seen many transitions in industry and businesses over that 155 years. Not me personally, although at times it feels like it. But I do anticipate significant change in the industrial landscape over the next 10 to 20 years because of the environmental agenda. And I see it as an opportunity in all facets of our business, whether it's corporate banking, investment banking, capital market activity, asset management, personal wealth management for our personal customers. I see it as an opportunity. So I also think motivators for change will be peer pressure. Companies in industries will see peers of them making commitments and attracting strong advocacy from their investors and their stakeholders. And I also think there'll be supply chain pressure. There'll be supply chain pressure. Large corporates will put pressure on their supply chain to make a commitment. So I'm more optimistic.
I'm glad to hear that. Leila, are you On trend with that poll, above, below, what do you think? I'm afraid we've lost your sound for a moment there, Leila. There we are.
Sorry about that. I think that the outcome will be varied across countries and sectors and industries. Those longer dated, highly capital investing industries like energy, electricity generation might take a bit longer to implement. However, I do think that the major catalyst for change, or a major catalyst, in addition to what's already been said, is going to be technology. And the impact of technology is exponential. And I think the COVID crisis will hasten the adoption of new technologies, which will replace, for example, the old traditional means of doing things. Some futurists are predicting that between 2025 and 2030, large oil companies will peak and then start to contract and reduce oil production. And I think that unfortunately, we don't know what we don't know. And in technology, some of those changes are yet to unfold. And the confluence of the technology with the consumer and general citizen, private citizen advocacy is likely to hasten that transformation.
I would add, it's not just the futurists who say this about oil demand. It's many times within the forecasts of the oil companies themselves. So it's moved from something quite fringe to something in many cases quite center. Scott, I'm curious what you thought about that poll outcome.
Well, it's interesting. I find the distribution being kind of a normal distribution.
Right.
Tells you like there really is no consensus here. And I love the one which said 2025 or after 2025. I guess, in the year 3000, we could get there. But,
right.
I think the real, one of the issues in that we haven't really touched much on is in the area of infrastructure. We need a lot of infrastructure to bring about these changes, whether it's cogeneration, transmission. I could go on. We don't have the time for it. But, I think that policymakers and us as the private sector should be highly focused on supporting the development of infrastructure.
Indeed so. So I've got actually a question here that I think is going to be a great one for us to look at as we approach the end. And that is, which large country do you think will reach net zero first and why? And I'm going to go, Leila, to you first.
Wow. I think it's difficult to, I don't think that one country will necessarily, I don't think that that's the right way to look at it. I think it'll be industries that are spread across countries. I think it's highly unlikely that one specific country. That said, possibly the Nordic countries are likely to make good progress. Those countries that are less dependent on high industry and who are small and nimble and able quickly to adapt and change.
Very good. Scott, what do you think?
Well, the data seems to support my view, which is I'm optimistic it's the United States. Carbon emissions are declining in our country. And, I think with the new administration, there'll be more incentives to accelerate that.
Certainly. Noel, what say you?
I would probably pick one of the European countries that are going to achieve it sooner because of the general commitment that Europe has had to this objective for longer. But it's for me, it's less about who crosses the line first. It's more about how the big carbon producing countries cross the line early, and not who gets there first. It's about impact on the overall environmental situation of the world rather than who's first.
Very good. And Ma-Jun, what say you?
Yeah, I know it won't be my country, but I think what happened here matters to the rest of the world, because we do have 28% or more of the global total here. So I think it's so important for us to try to cut our emission. But hopefully, we can work with those front runners, because they have the huge supply chain, in China, many of them. So a quarter of our carbon footprint is actually for exporting. So we hope that we can all come to work together. We do our own part with our largest emitters, but in the meantime, try to collaborate.
Ma-Jun, thank you for that. And I think actually that is a superb place for us to end, which is on a note of collaboration and on a note of cooperation on this shared goal. Thank you very much for joining.